Hey everyone, Chris here. Today I want to walk you through why now, yes, right now, might be one of the most strategic moments in decades to consider selling your property in Boston. Whether you're an investor, a homeowner, or someone who's just been holding a piece of real estate for years and wondering if now is the time to act, this message is for you. We're going to look at the market through both a long-term and short-term lens. We'll talk about historical price performance, real-time buyer activity, interest rate trends, tax considerations, demographic shifts, and more. So stick with me because by the end of this, you'll have a much clearer picture of why this moment in 2025 is unique and potentially powerful for sellers. Let's start with the big picture. Boston real estate has shown long-term strength for generations. It's not just anecdotal, it's in the data. Take the Federal Housing Finance Agency's House Price Index, for example. If you look at Boston's numbers from the late 1970s, specifically around 1977, the index stood at approximately 26. Fast forward to Q1 of 2025, and we're now looking at a value approaching 300. That's more than a 10x increase over less than 50 years. And that's not even factoring in the rental income, tax advantages, and leverage opportunities that many owners have benefited from along the way. In other words, if you've owned your property since the 90s, the early 2000s, or even pre-pandemic, you're probably sitting on substantial equity right now. That kind of appreciation is rare and valuable. And while real estate always has its ebbs and flows, the upward trajectory of Boston's housing market has remained remarkably consistent. It's the kind of long-term wealth builder that most markets can't replicate. But historical strength is only part of the story. Let's turn our attention to what's happening right now in 2025. As of this spring, the median list price for homes in the Boston-Cambridge-Newton metro area is hovering around $900,000. That's up sharply from even a few years ago. And while the fever-pitch bidding wars of 2021 may have cooled, we're still seeing competitive offers, especially for well-located, move-in ready, or value-add properties. Inventory remains low, with absorption rates tightening again. Days on market, they've been shrinking steadily since the beginning of the year. That tells us one thing clearly: buyers are still in the game.
Thinking about relocating to Boston? Well, I've got just the thing for you. Me and my team have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research. I've linked it down below, from top employers to the best hospitals and a boatload of other things that you need to know before you make the move. The best part is that the guide is 100% free. That's right, you heard me, 100% free. Just click the link below in the description or the top pinned comment. Hope that helps.
Now let's talk interest rates. After a dramatic rise in 2022 and early 2023, where we saw mortgage rates briefly spike above 8%, things have stabilized. In 2025, rates are sitting in the mid-6% range. That's not the rock-bottom environment of the COVID years, but it's also not crisis territory, and perhaps more importantly, the buyer pool has adjusted to this new normal. But let's be real, affordability is still a concern. Wage growth hasn't kept pace with housing prices, and as borrowing costs hold steady, buyers are becoming more price sensitive. That means we may be near a ceiling, at least in the short term. When buyers hit that threshold, it's common to see price appreciation flatten out, or even see subtle declines in markets that were previously red hot. So if buyers hit that threshold, it's common to see price appreciation flatten out, or even see subtle declines in markets that were previously red hot. This is exactly why timing matters. If you're a seller sitting on strong equity right now, this could be your chance to lock in gains at or near the top. You're not selling out of fear, you're selling strategically while comps are still strong, demand is still active, and you're not competing with a flood of inventory. Speaking of inventory, let's look at that too. New listings in many parts of Boston remain well below pre-pandemic levels. That's partially due to the golden handcuffs effect. Many owners who locked in 2-3% mortgages during the pandemic simply don't want to sell and take on today's higher rates. That reluctance is keeping supply artificially low, which continues to prop up prices. But this won't last forever. As rates eventually ease or other economic pressures mount, more homes will hit the market. And when that happens, sellers could face more competition and downward pricing pressure. Let's also factor in something that often flies under the radar: local policy and tax implications. In 2024, we started seeing some ripple effects from commercial real estate softness in downtown Boston. Office vacancies remain high, and many city budgets, especially in urban cores, are feeling the squeeze. One way municipalities may look to make up for those shortfalls: raising residential property taxes, particularly on investment properties or second homes. That's not a certainty, but the writing is on the wall in some cases, especially as cities look to rebalance post-COVID budgets. If you're an investor or landlord, these rising operating costs, combined with tighter rent growth and the potential for future regulation, could put a serious dent in your net returns. That makes this window an especially smart time to evaluate whether to hold or exit.
Hi guys, it's Chris. As much as I love making these videos, there's one thing that I love more, and that's helping families and people from all over the US make the move here to Boston. I've helped countless families make the move, so whether you're coming out for the week, the next month, or even the next year, don't hesitate to reach out. My contact information is below, right there on the screen, and linked in the description in case you missed it in the on-screen pop-up. I look forward to helping you and your family make the move to Boston.
And then there's the demographic shift. We're watching younger buyers, millennials, and now Gen Z, rethink where they want to live. With hybrid work becoming the norm, many are willing to trade urban convenience for more space in the suburbs or outlying areas. At the same time, baby boomers are starting to downsize in greater numbers, adding subtle pressure on the market from both ends of the age spectrum. That doesn't mean Boston is going out of style, but it does mean that areas that once felt untouchable in terms of demand might start to see a shift as buyers reevaluate what they can get for their money just a few miles away. If you own property in one of Boston's premium neighborhoods, Back Bay, Beacon Hill, the South End, the Seaport, this may be the moment to capture that premium before broader market forces normalize pricing. We're also seeing institutional investors starting to pull back. Hedge funds, REITs, and other large players that were very active in the residential space from 2020 through 2022 have become more selective, especially in higher-cost coastal markets. That pullback could translate into fewer large cash offers and less upward pressure on pricing moving forward. In other words, this is a transitional market. We're not crashing. We're not in a bubble bursting, but we are at an inflection point.
And inflection points are when smart sellers act, because they see the indicators before everyone else does. So what does that mean for you?
It means this: if you've been holding a property in Boston for years, whether it's a condo in the North End, a townhouse in Charlestown, a multi-unit in Jamaica Plain, or anything in between, it's time to take a serious look at what that asset is worth right now. You may be surprised by how much equity is sitting there, ready to be unlocked. Maybe that means selling to reinvest in something with stronger cash flow. Maybe it means moving equity into a vacation home or income-producing property outside Massachusetts. Or maybe it just means simplifying your portfolio and getting liquid ahead of potential tax or policy changes. Whatever your long-term goal is, this is the kind of market that rewards decisive action. So reach out, let's run the comps. Let's talk about where your property sits in the current landscape and what strategy makes the most sense. Whether you're looking for a quiet off-market exit or want to go big with a full marketing campaign, I can help you make the most of this moment. Because while Boston's real estate market has always rewarded patience, it also rewards timing. And right now, the timing just might be perfect.